Start your business day right. Morning Drive with Tim Elliott on Mira Business FM.
Welcome to Mira Business FM. This is the Morning Drive. If you're with us on the website, mirabusiness.fm, welcome. And a welcome if you're on YouTube or across social media with us as well. Perhaps it's Instagram that you're watching, listening on, maybe TikTok. Who knows? You're welcome to be here. Now, our podcast, practically all that we do is podcast and is available wherever you get your podcast. Just look for Mira Business FM. And a subscription is always appreciated. To find out more, mirabusiness.fm, the website. To contact us, info@mira.fm, and to whatsapp.mira.fm. We start this morning with a week in gold, in precious metals, and the oracle that is Jeff Rhodes is back with us in the studio. Jeff, lovely to see you.
Yeah, good morning, mate.
Nice to have you here. Thursday, a day early. Usually we would talk to you either Mondays or Fridays. We're kind of in a Friday thing at the moment, but Thursday morning you're here, and there is a very good reason for that.
Yeah, absolutely.
I'm going to come to it. Because I want to catch up a little bit first, though. It's been almost a week since we've had a chance to talk. I know you're itching to talk about silver. I can see you there. You can see it in your face. And, of course, the Fed meeting. But I want to start with gold because my observation, reading your reports, kind of watching what's going on, we're still at steady eddy, aren't we? It's around about the 4,200 mark.
Yeah, it is exactly at 4,200. Yeah. It's almost like a new gold standard. Wherever we go up a bit, it's back to 4,200.
Yeah.
We go down a bit, it's back up to 4,200. It feels as though this is a point of equilibrium. The longs and the shorts, I think, are equally happy, and also, you have to acknowledge we're heading into the end of the year. We're into the festive season. The holidays have started.
Yep.
In the US, the Christmas holidays start and Thanksgiving Day.
I was going to say, starts around the end of November.
It does, yeah. And so you see the market trading volumes fall away. And then what you're seeing is the residual business is taking place. There will be no fresh business. There will be no fresh positions being taken by investors or speculators ahead of the end of the year. So for all intents and purposes, the markets are very much in a holiday mood. We could have had some fun and games after what you want to come to, Tim, after the Fed rate decision. And it could have been interesting, so we'll touch on that in a minute. But definitely, it's a sideways pattern within a very, very narrow range. I think it is an amazing performance by gold at the end of these 12 months where we've seen the price appreciate by 50 to 60%.
Yeah.
And it's still hanging in there. There's no downward pressure.
It doesn't feel like there's going to be any downward pressure either. You often talk about this, and I kind of marvel at the things you say, because generally you almost exactly to I don't know how many decimal places, but it just feels like the graph is just a flat line.
It is,
just very, very
absolutely
straight at the moment.
Absolutely.
So look, ahead of the Fed meeting, we're going to get to the Fed meeting, not quite yet. US dollar advanced on Tuesday, near 1 week high, better than expected job market figures. So a resilient labour market. The first observation I wanted to make today with you is that the data is kind of coming thick and fast. We had that period at the government shut, but there was nothing really to talk about. Nobody knew what was going on. Yeah. Government wasn't releasing anything. But now we're starting to get a picture, I think.
Yeah, it's basically the data's coming in gradually, and we're playing catch up. And there are no shocks.
Yeah.
And so it's business as usual. It's quite interesting you mentioned the dollar, Tim, and you frequently do. And, of course, gold is another currency.
Yeah.
And so, therefore, it fits into the FX genre. But the dollar as per the DXY, which is a basket of currencies against which the dollar is set against, hasn't really moved. It is actually steady Eddie number 2. It doesn't really go up much or down much. It's been one of the more, if you like, least active years I can remember in FX, honestly. And I think probably it's down on the year about 5 or 6%. Now, the popular myth is that strong dollar, weak gold, and vice versa. Yep. Well, the gold is up 55%, and the dollar's down 5%. So, that I don't really think the dollar per se is much of an impact on the gold price. It's much more interest rates and getting return in your cash, because the lower interest rates go, the less return you're going to get on your money just leaving it on deposit. Yep. And so you have to look at another way to make money. And this is a big problem for the funds when they look at their traditional way of making money from equities and bonds and a bit of FX trading. Well, the FX trading's not really been there this year. Bond markets seem to me to be pretty steady as well. Equities have done well. Yeah. Very well. So good equities, good gold. I think it's because the money is flowing, and it has to flow somewhere, and it flows to those asset classes that are proven to be the best performers. And really, over the last few years, equities and gold have been equally good performers.
I wonder if anybody's ever referred to the US dollar as a currency as steady Eddie number 2 before. I love that. I think we've created something here. Look, let's get to the Fed meeting then. So this is another 25 basis point cut. 0.25%, third cut this year as well, kind of as expected. I know you pointed to at least 25 basis points, maybe 50 basis points earlier on. How would you summarize the meeting? Because I thought it was the tone of the Fed chairman in the post-decision kind of press conference that was interesting. But what did you think?
Yeah, well, first of all, it was, I think, it's the most diverse views have been set at this meeting than there's ever been before, because normally there's 12 out of 12. They vote, they have a consensus that works. This time we hear that it's 9 against 3, which is unusual. And of those 9, 3 of those 9 were in favour of 50 basis points. Yeah. Good boys. They would have been in my camp. And 3 were no change at all, and 6 were 25 basis points. So there was quite a lot of discourse between the 12 of them. But at the end of it, it looked like it's been nice to know you guys. I'm off very soon. Yeah. Type of presentation by the Fed chairman, and he's probably very happy to step out of that pressure pot, because clearly he's been under pressure from President Trump to cut rates. And to be fair to Jerome Powell, he stuck to his guns, but he's probably very relieved to be having a break. And then we're going to see what happens. But it definitely will be a Trump pick. Definitely. There's no doubt about that. Yeah. And that tells me we're heading much lower in terms of interest rates over the next 2 years, with Donald Trump on record more than once saying that he believes that 2% is the right level for interest rates in the US. Now, is that really the case? We will see, but I definitely think the pressure from now on is going to be on the downside, unless the economy really starts to motor with interest rates where they are. Then it won't be possible. But I think if there's going to be a move in interest rates from here, it's most likely down than up.
Well, and it seems possibly sooner rather than later. There's a lot of talk of another cut in January. Whether that happens, I don't know. It'd be interesting to see what how the White House responds to this, because you do kind of get the impression that it will.
Yeah, I disagree with that. I would. I think that the Fed chairman, I think his term is up in February.
Yeah.
So I don't think there'd be any more movement in interest rates.
It's chatter at the moment, but I've seen a couple of...
I call it noise.
Yeah, I know.
A bit of noise about it,
But
when
I've
we
seen
get
a
into
few reasonably influential kind of people online saying, "Oh, it could happen," but again,
in January, no.
Okay.
I really don't think so.
That's another one of your definite things I'm putting there. January. I'll just put in a big X by January. But whatever happens, it'll be interesting to see how the White House respond, because you do get the feeling that President Trump will be good, but this is not enough. That's the overriding kind of impression I have. And you're right. I mean, the pick for the next Fed chair seems to be Kevin Hassett. He's an economic advisor at the White House at the moment. He's kind of the front runner. I mean, I don't know. There's plenty of room to cut more, I suppose. The other thing, Jerome Powell, and this goes back to kind of the tone in the press conference, and I think you characterise it absolutely right. There seemed to be kind of a sense of relief. I'm out of here kind of view, end of the year. He said it was a close call, as you said, lots of not dissent, but certainly not consensus. And that he feels right now, this is what he said, I could make a case for either side, that's what he told reporters, and that policymakers are in a good place to wait and see how the economy evolves.
Absolutely. And there's no doubt that given all, the apparent problems in the world, the US economy has moved along very nicely. And that, I think you only have to look at the Dow Jones, to look at, equities globally, actually, that they've done very well. And so it's been a bit of a bumpy year, I would say, for the money managers. They would have done well. And certainly the funds have piled into gold in the second half of 2025. Really a big movement of fund money into gold and, of course, into silver.
I know you want to get there, and boy, will we get there. Well, James Thomas is coming in this morning. He's a financial guy. I'm going to put that to him as well, because you nearly went to the bumper cars analogy there for a moment. A bumpy year is close enough to bumper cars to me.
Yeah.
We seem to be coining phrases. How good they are, I don't know, Jeff. Yeah. Here's something I just wanted to bring up to you, and this is not for any reason other than I thought it was interesting, because it kind of echoes how you've been about gold over the last 3 months or so since you've been, joining us. So this is by way of compliment, I think. This is a market analyst at eToro, who lots of people will know. His name is Farhan Badami. He's looking at gold's performance in 2025, looking ahead to 2026. That's what happens this time of year. Gold is on track to end 2025 as one of the world's best performing assets, surging nearly 60% year to date, which you've said this morning, once again. Strongest yearly gain in more than 4 decades. The metal remains resilient. This was ahead of the Fed meeting. Looking ahead to 2026, he suggests that continued uncertainty could push prices even higher, with $5,000 an ounce not off the table. It's like he's been listening to you every week.
Well, he hasn't, Tim, because I said 6,500, and you made a note of that.
I did, actually.
And I stick to that. Look,
it's here.
When you say 6,500, it sounds like a massive number, but percentage-wise, from where we are now, it's not that much.
That's true. If you put it that way, you're right. If you look back a couple of years, it would be.
But we're in a different. There's been a paradigm shift.
Yeah, absolutely.
There's no doubt, and the days of $2,000 are gone.
Yeah.
Maybe the days of $3,000 are gone.
Right.
But why wouldn't you? I would ask you a question. Given you're a money manager, and you need to go with the money. You need to actually follow the trend. Okay. Why would you bet against gold now? I mean, it's not overbought, and when you look at the amount of global investment, the global investment pool I would think that holdings of gold, no more than about 1 or 2%. And given the popular feeling that at least 10% is the right level to have gold in your portfolio, there's still a lot of room for fund money to come in. And of course, when the fund managers are asked, why did you invest in this? It's always track record. And the track record is now, as my colleague at eToro said, is one of the best performing asset classes. But it always has been, whichever period of time you look at.
Yeah, it's just what we've seen recently is it felt out of character, but it's clearly not out of character. Do you see what I mean? I can't put this.
Listen, what's happened is gone from the back page to the front page.
Yeah,
that's really what's happened.
That's fair. Yeah. But if you were going to ask me, what did I think of gold? I was sat talking to our producer Michael the other day, and he was talking about gold. It's not his area, and all the indicators. And you are saying, up to $6,500 an ounce. That's a great deal of room to maneuver from where we are now, obviously. And if I ever research and I look at what some of the big analysts say, you're all pretty much in tune with one another.
Yeah, that's a bit of a worry. It's a bit of a crowded space, to be honest with you. And when the time to think down is when everyone is thinking up. So, but I don't know that everyone is thinking up. I think there are still some cautious people out there. But I go back to the pool of investment money available to go into gold. Only a very, very tiny percentage has made that move already. I think there's a lot more room to come. And as I say, the key is President Trump. And President Trump wants 2% interest rates. Yeah. And President Trump tends to get what he wants.
He does. And as you've said many times, he's good for gold.
He is. Trump is good for gold, yes.
Yeah, that's fair. There are people more bullish than you, of course, which is, let's see. Well, we'll keep talking to you. Let's move on to the big one.
The big one.
The big one. This
should be playing Hi-Ho Silver Lining.
I know we should.
You need some music.
Yeah, we do. Unfortunately, I missed a trick again. But silver is at the moment it's hitting crazy heights.
Yes, well, not crazy. Expected
by you.
Expected by me, as in the public domain 12 months ago. Yeah. On a couple of podcasts. One was Sprott.
Yep.
Can't remember the other one, but Sprott is a big one. And when I kind of shocked the interviewers when I asked if I could talk silver, this is when silver was $29 per ounce. Yeah. And I made the prediction on that show of $60 within the next 12 months. And
this is why I keep using my slightly corny line, the oracle that is Jeff Rhodes, because unfortunately I look at what's going on and everything is
But with silver, it wasn't difficult, Tim, because when you looked at the fundamentals of silver, physical demand versus new supply, it has been in deficit for many years, for 10 years.
Yeah.
And that deficit has been fed by the perception of large amounts of above-ground silver held in vaults in London. Okay, so that tended to be that filled in that gap between demand and supply. Yeah. But it has emerged very clearly this year that a lot of that silver is actually pledged, and it's pledged against ETFs. Mm-hmm. And so the amount of the percent, and the ETFs are always backed, or typically backed by large bars of silver sitting in London vaults. And because of those large bars sitting in London vaults, everyone thought, guess what? Silver is in abundance. Mm. But when it emerged that they're actually pledged, they're not available, then there was a bit of a panic. And silver, which is always... Contango is the difference between the spot price and the forward price in commodities, including gold. And silver has always been full contango. So that means if interest rates 5%, the spot against forward silver swap would be 5%. Mm-hmm. that the silver lease rate 0 for years.
Yep.
And then suddenly it reached this year lease rate 30%. So if you're short and you had to borrow to cover your short, you were paying 30% per annum. It's unheard of.
Yeah.
And so silver going from 29 to now 62
It's 112%.
is
today.
a bit more than that, Tim. I think it's about 120% against the high right now. The thing is, for me, it was a matter. I've been saying it's a matter of when, not if. So, and I kind of shocked you the other day, suggesting $125.
Oh, well, are you still bullish for that?
I
think
believe
you are.
125 is again a matter of when, not if.
Okay. Your predictions were 125 for silver, gold 6,500, as we know, 6.5 platinum. We'll get onto that in a moment. 3,500, and palladium 2,500.
Yes.
I know you're sticking with it. I get that. Just a word, actually, just briefly on platinum and palladium this week. Anything to report?
No, it's been pretty quiet, steady. Platinum was up to 1,700, palladium above 1,500. So on the way to my eventual targets for next year. But it's quiet. Yeah, it's definitely. Look, many refineries around the world, many industrial operations around the world actually close over the Christmas and New Year periods. There's a number of gold refineries in Switzerland where they're closed. Not now, but they'll close for about 2 weeks over Christmas and New Year. And then you can have a bit of a shortage. But as I say, whatever you see between now and the end of the year isn't indicative at all as to what we can expect in terms of all four prices in 2026. I'm so bullish I can't see straight, Tim.
I just think it's nice to see you smile. That's what gets me. There's something else just before we've got 5 minutes left. There was a newspaper article this week, and I'm interested in this just for your kind of opinion, really. UAE residents travelling to India with gold jewellery may soon get a breather, was the headline. So India is considering at the moment a major overhaul of its custom rules. Finance Minister Nirmala Sitharaman has signalled plans to simplify and modernise procedures at entry points. Now, NRIs have been pushing for this. I think we've wanted this for some time. The last duty-free jewellery limits were set in 2016, and clearly they don't match gold prices at the moment. That's a huge change. What do you think about that? Could you see that happening?
Yeah, I can. The duties applied to gold imports into India have always been quite volatile, really. You've seen it since I've been here in the UAE. You've seen maybe 6%, I think, was about the low. It's been up to 15 or 16%, and it does tend to be a bit of a moving feast. So, India, I would argue strongly, India is the biggest buyer of physical gold in the world. Lots of people talk about China, and fair enough, and China is the biggest gold producer in the world and doesn't export 1 ounce. So all of that, their 400 tons, are actually consumed within China, and then they are importing a lot more, 1,000 tons or more. That often feels as though it's part of a trade finance type operation rather than real demand. I can't really prove that, but it feels that way to me. Whereas India, Indians believe in gold, and I think it would be a very good move for Dubai, of course, if Indians, non-resident Indians, going back into India were allowed to take in a lot more. It would give a massive boost to the jewellery sector here. There's no doubt about that. I could easily see that happening, actually, particularly we've got the CEPA. I mean, UAE has got CEPA agreements, import-export agreements with many countries, including India. So, yeah, I think a coming together of the two nations is quite likely and would be extremely positive on all sides.
Yeah, I would have thought so. It just seems, if you look at what the finance minister said and read, I don't know if I should, we probably shouldn't read between the lines, but it seemed very positive. We need to make them a lot more simplified for people to feel that it is not too tiresome, cumbersome for them to comply with the expectations and rules.
Absolutely, and we have to be realistic because import duties are high. It does tend to encourage what they call alternative methods of gold flowing into India. And so if you make it less economically attractive, then you kill that side of the business, which is obviously good for everyone.
Yeah, absolutely right. Jeff Rhodes is the CEO of Goldstrom Advisory. I omitted to say that earlier on, but have I missed anything today? Is there anything else you wanted to bring up?
No, not really, Tim.
I
think, no, not really. And we could bring up the fact that Spurs won 3-0 on Tuesday, if you had to mention it.
Can I just point out, Jeff turned up this morning in a jacket. It was a little bit, I was going to say parky. That's an old London term that you'll understand. Slightly chilly this morning, and took his shirt off and revealed a Spurs, a polo shirt, I think they call them, don't they? Which, of course, burned me to my very soul. No, it's a good win, to be fair. Jeff, lovely to see you. Thank you for coming in.
Thanks, Tim.
Appreciate it. Jeff Rhodes, CEO of Goldstrom Advisory. This is Mira Business FM.